Well, welcome back to the Mining Indaba in Cape Town yet again. We're back here live for one of the highlights of the Mining Indaba that's become like a tradition every year now. So we're talking about the investment battlefield where young entrepreneurs put their ideas forward to a very skeptical sort of, what do you want to call it, dragon's den, shark pool, and get them scrutinized and questioned. Now the winner gets the investment and the go-ahead. And the other day we were speaking to, in this very chair, to Walter Sharma, who came second last year. He got 180 million because of the win. He managed to raise that much money for his project. We're going over live now to see who's going to win this year.
The winner will receive a free exhibition stand here at the Mining Indaba in 2021, marketing and the post-event report for this year's Mining Indaba, and also a value of $6,000 profile in an upcoming edition of Australia's Paydirt. Let me introduce, as people are all filtering in, there's still a few seats left, come and join us. I'll introduce our panel of judges. We'll start on the far side there with George Cheverley, Portfolio Manager at Investec Asset Management. Thank you, George. Heidi Sternberg is next to him, Sector Specialist Mining at Public Investment Corporation. Erez Ishilov, Managing Director of Traxys. Thank you, Erez. And Jonathan Cordero, Head of Corporate Development, Eurasian Resource Group. So now that we're ready, it's time to get going and time to start with our first company. Have we got our first presenter, Nana Bope Sagmoir, President and CEO of Roscan Gold. Let's give him an applause, get him psyched up.
Thanks, moderator. I think we can quickly run through the forward statements and then just get right into the guts of it. Why investors should care about Roscan Gold? I think we are in the discovery phase in the equity mining cycle where we can usually see outsized returns. We've discovered a high-grade, shallow gold discovery in Mali in a camp that has already delineated over 50 million ounces, and basically we're well funded to continue to do the work that is required to advance the discovery towards a resource. Most importantly, I think what sets us up from the juniors is a team that we've put in place that have the ability to take the discovery to the full 9 yards upon success, and we don't have to be at the mercy of the majors around us. So we're honored to have Sam Jonah come on board as a non-exec chair. And basically, we know Sam Jonah's record of building juniors into significant assets and adding tremendous value to shareholders. Corporate social responsibility is something we take very seriously. And we engaged with the mayor on our first maiden visit to site to let them know that despite the fact that as an exploration company and most of our dollars should go into the ground, with our meter's might, we'll still be taking on some projects that would help us build a strong social license going forward. So this is the location where our assets are. That's in the blue tenement package, and the adage goes, where to find gold is definitely in the head frames of mines. And we're lucky to have 8 producing mines within 80-kilometer radius. And the minimum producing resource in that vicinity is about 2 million ounces, ranging up to 20 million ounces in certain parts. So we're very confident that we're in the right address. And as we continue to do the work, we probably would be on the list of those projects as well in terms of ounces delineation. What excites me is the discovery phase is very important for a junior, and that's where you get all the excitement. And with the tools that we have at our disposal, we've not only been successful making one, but we've identified 7 other priority targets which will be part of our program this year. And we hope that that is definitely going to accentuate the impact of the discovery phase in our evaluation. And more importantly, because there are a lot of hungry mills around us, upon success, we potentially should see the M&A premium also begin to build. So we basically on the same rocks as some of our peers, trading at probably 4 times our valuation. And I think as we start educating the market of our drill campaign, we probably would see some catch up on that front. Where the drill is right now is a high priority target. This is an 80-meter wide zone. And basically the average grade in this part was around 4.5 grams. We definitely think it's not a fluke and there should be some roots to this. And that's where we have our drill turning to test the depth potential. And on top of that, we've also done enough preparatory work on surface to see how long the strike could be here. So stay tuned for updates in 4 to 6 weeks as we go along. Regional profile is very promising. The techniques has been termite mound sampling, soil geochem, and AC drilling. And there's been good correlation between the termite mound anomalies and the soil geochem. And that makes us confident that not only the Mankuki discovery to the south, but all the other areas, actually, particularly the ones closer to Fekola, are yet to be drilled, could also help come up with some interesting results this year. So far, we've completed about 28,000 meters of drilling. Majority of it is AC. We've started increasing the diamond component. We're about 2,000, and our current campaign would have a lot of diamond to help us understand structures, and that would lead as a guide to other priority targets that we hope to test for the year. Basically, this is sort of a snapshot of where we drill today in comparison with other analogous deposits. And we're confident about the depth potential.
I'm going to have to stop you there, Nana. That's our 5 minutes up. Thank you very much. We have to be brutal when it comes to the final. I'm sure you don't mind. I'll turn to our judges now. We've heard at first of the finalists. Nana was very brave to go up first. Have we got any comments, questions?
Should I go first?
Yes, absolutely.
Okay. Let's start with the elephant in the room. The security situation in Mali. There were some incidents in the past couple of years. Do you want to address that?
Yeah, that's been a very serious concern, and we sort of far removed from where the hotspots are. We're about 650 kilometers to the southwestern part of the country, where you've not seen any of those incidences occur. There's mainly banditry and stuff like that, but we're still taking it very seriously. And we have an ex-French military intelligence officer in charge of our security, making sure that our locals and expatriates get on site and back home safely. They escort us to and from the capital once we are in country.
Okay. One more. For us at Traxys and at Palanker's Traxys Battery Materials, perhaps the most important criteria when we kind of decide if we invest or if we JV with the portfolio company or with a commercial partner has to do with how we assess the odds that you will actually go into production and you will be more than a what they call lifestyle company or someone who wants to flip. Would you like to address that? I see that you emphasized on the execution team their ability to actually deliver. But would you like to say a few more words about that and kind of give us the comfort that we're actually going to see gold and not just shares?
Yeah, I think that's something that gives us great comfort and distinguishes us clearly from the juniors. And like I said earlier on, Sesame, Jonah took Anglo Gold, Ashanti Gold Fields of Boasin mine from a single mine to a multi-mine company across Africa through about 6 different countries. was able to generate the necessary financing and attract the people that were needed to unlock that value. So having him on board as chairman gives us a strong latitude to actually add value and move in that direction more rapidly than our peers.
Thank you, Erez. Jonathan?
You're in an area that is very known for good gold mineralization. You've shown that many other companies are operating there at reasonable, although not really exciting grades. You've made some discoveries that are also interesting, but not 100% exciting on the grades. What is the growth perspective that you can offer to potential investors going forward if you had to place a vision on your company?
Yeah, I think basically we're very confident that what we've done is really onto a significant discovery. We're drilling right away, so I can't make any comments on that. But I think we should be able to demonstrate to the markets that some of the structures that we have encountered are very quite similar to what our peers are seeing, just right contiguous to our ground. So, and they trading at much more higher valuations is a very good proxy for guys that want to see how the future could look upon our success, to just look at how the peers are doing and then connect the dots in that regard.
We've got time for a couple of more questions. Heidi?
Sure. Thank you so much for the presentation. You maybe didn't get to the slides where you would discuss your future plans. You said you were fully funded for now.
Yeah.
What do you hope to achieve with your funding for now, and where do you expect follow-up funding to come from?
I think on the funding front, we're very comfortable with what we have, and I think the funding strategies that we put together earlier on would actually allow some warrants to bring some more money. Sometime in July, it's already in the money, and that could bring an additional $4 million to Treasury. So we sit comfortably with the Treasury, and we feel we can accelerate the campaign results dependent. So that's been basically the bane for a lot of the junior mining companies in the sector, access to capital to really execute their strategy, and I think that's a significant differentiating factor for us. And our warrant structure over the life of the company could introduce an additional $50 million to Treasury.
George, did you want to take a final question?
Yeah, just are there any people, villages on site, or is it open ground?
Where we are, there are a few villages out there, and we provide significant source of employment for those villages. But I don't think at this stage we should be worried about relocation and challenges in that regard. We got a wide, broad tenement package. There might be zones that might require some relocation at some point, but that's why I stressed on the social license in the early part of my presentation. We're building strong connections with the mayor, the ministers, and the government, so that if it comes to that, we should be able to get through that with very few challenges.
Nana, thank you very much. We've got time for one more question, if any of our judges wanted to ask one more. Nana?
I could ask a question, please. You've got a very large land package. How are you prioritizing your drill rigs, and perhaps you can give us a little bit more color on the drill teams that are on the ground at the moment, how big your team is, yeah.
Well, we currently have one drill rig turning, and we've set that on our highest priority target, because we think the potential to advance that to the resource is high, results dependent. So that's where our focus is, and we're drilling deeper. It's going to help us understand the structure as well, so that we can apply that model to some of the earlier targets and be able to replicate success that we achieve on the high priority targets. But I think it's fair to say that there could be an acceleration of the current campaign, and we could get more drill rigs on site probably before the end of month.
Erez, one more?
Yeah, no, I just noticed, I don't know if everyone saw, but the speaker dropped a 10 Rand note on the floor, and he actually picked it up, which means that he has respect for investors' money. So, well done.
Thank you.
Well, thank you, Nana, for an excellent presentation. Your hard work is done for now. You can take a seat, and if you can join me in thanking him. Our next speaker is Remy Velshka, Finance Director of Arc Minerals. Remy.
You
know how you're going with everything, yeah? You know everything?
I think so.
Yeah.
Thank you, Dominic. Hello, everyone. Thank you for being here. So, I'm going to talk to you about Arc Minerals. We are a $25 million company listed on the UK Stock Exchange, the London Stock Exchange. The board and the executive own about 16% of the company. I'm the finance director. I come from a banking and investment background. When you look at junior companies, especially exploration companies, I think there's three things that matter. Which commodity you're involved in, which asset do you have, how good the asset is, and third, and most importantly, actually, how you're going to finance what you're trying to do here. So let's talk about the macro picture. Most of you know that for copper, we're entering a structural deficit for the next few years, if not decades, and all the big majors and the Chinese are desperate to acquire a big pipeline of copper supply for the next few years. If you give you an example, BHP, 85% of the copper business is one mine, Escondida, and the grade is degrading by 10% a year. So it is strategic to basically find new supply of copper. Why does it matter for the juniors? It's because if you have the right asset, even if the price is down, even if you have coronavirus or any other kind of bearish momentum around the commodity, if you have a tier one asset, the majors or the Chinese will buy it from you, rain or shine. So do we have the right asset? We're basically in the northwestern zone of Zambia, what we call the Domes region. We have a license, or package of license, which basically covers over 850 square kilometers of land. We're in the right district. Next to us, we have Lumwana that belongs to Barry Gold, Sentinel that belongs to First Quantum, Kensenchi a bit further east, and we are about 40 kilometers west of Sentinel. This whole group of mines, Lumwana, Sentinels, and our license, belonged to Anglo in the 90s, and we were ranked first in the targeting of licenses. When they left the country, the licenses have been split, and we are the one license left, which basically has a lot of prospect and has not been turned into a mine yet. Look at the neighbors. They're all between 500 million to 1 billion ton at 0.5%. Sentinel has the largest processing plant on the planet, and they're 40 kilometers east of us. So what do we have? We've done in the last 2 years about 51,000 soil samples on the edge of the dome and within the license. We have some of the best geochem anomalies in the entire country. And we've been drilling for about 2 seasons, which accumulates to 18,000 meters of drilling. Bulk of it is diamond drilling. We find 2 discoveries. One, which is Chiesa East, which has some of the best grade ever found in the country for copper. We have a new discovery we've announced 2 days ago called Muswema, a very similar high-grade oxide zone, which is starting to hit some sulfides about 150 meters from surface. We have another 10 or so targets, mostly driven by the geochem and the geophysics we've done over the last 18 months. But we need more time and more money to be drilling it. Let me give you a few highlights of the drilling holes. Hole number 2, which I think we hit in May or June 2019, 26 meters at 1% from surface. Number 4, 18 meters at 2.3%. You will never find in Zambia 18 meters at 2.3%. Kalumbila, Lumwana, Kensenchi, none of them have ever had those results. So it is in the oxide cap. It is from surface. It's a lot of smoke. There must be fire. The fire is a big sulfide ore body, which we are trying to locate. We're starting to hit it at Chiesa. We're starting to hit it at Muswema. There's a lot of other targets which we haven't had the time to drill this season. We stopped early December into the rains, and we're going to try to pursue that into the start of the drilling season, end of April, early May. Now, let me talk about the finance side. I've invested in many companies, smaller, bigger than Arc Minerals. What I hear from executives most of the time is, my background, I've taken a company that was worth $25, and I've taken it to $200 million over 5 years. I'm a rock star. If you look at the share count, they've also increased the share count by 5x or 6x. So basically, you arrive 5 years later, and the guy tells you, I've taken a tiny junior, and I took it to $200 million, but the share price has not moved. And so those guys can go around and raising money again, pretending to turn small cap into mid cap, but you, the shareholders, has not made any money. So I'm obsessed with trying to avoid dilution. You cannot always avoid it, but what we've done so far, we've been lucky enough to offload one of the gold assets we had. It was 1 million ounces in Slovakia. We're going to get about $500,000 of cash in the next few weeks from this, and then some further cash flows based on milestone payments. And we have a 3 million ounces gold deposit in DRC, which we're in the process of selling. I don't know how much we're going to get from this, but I'd like to think the cash component of it will be between $2 to $6 million US, and it would take a few months. And we've raised about $1.7 million of loan a month ago. So depending on whether we can close the DRC asset sale, we'll have between $3 to $6 million budget for next year.
Thank you very much.
Thank you very much, everyone.
Now it's time for our judges to dissect Remy's presentation and project. Who would like to go first? Jonathan?
I'll go first. Remy, thank you again for your presentation. You're in an area where you have very acid solubility ratios, right? You have oxide zones, you have transitional zones, you have sulfide zones that require very different processes. At the same time, you mentioned you have 850 square kilometers of tenements, a huge area. So you can easily burn millions of dollars in exploration and drilling campaigns, and then find out that on the processing side, you will face issues in treating the material. How are you going to manage that risk?
Look, it's a very good question, Jonathan. So what we've done with the Chiesa zone, which I mentioned, we've drilled about 65 holes there, all in the oxide cap from 0 to 150 meters. 300 meters by 300 meters, we have about 25 meters of thickness continuously at 1%. We're going to probably joke it up. It's going to be small, nothing to do with elephants. But that we're going to use this to basically go through the med test and the mineralogy test to then be able to decide on a processing route for this high-grade small zone. That will give us a lot of information. We're already in discussion with a lot of majors and some of the Chinese group, and they are waiting for those results as well to see whether that could work. One of the natural fit for us is to get to a size that is big enough to potentially go to Kalumbila. Kalumbila, based on the public information, has about 10 years of ore left to put into the process plant. If we can find something big enough, we'll have to do a lot of work on the met to be able to see whether it can be processed from their plant. So it is key. A lot of people find decent-sized deposit, but the met doesn't work. We're working on this. We're doing a lot of the studies over the next few months in some of the oxide zone, but you'll have to wait to hit the sulfides to do further met test anyway.
Thank you, Remy. George, would you like to go?
Copper mines are expensive. You know, if you look forward, is your plan to find a partner to develop this deposit? Is that what you're really looking for, or do you think you can credibly, you know, actually do it yourselves?
Look, George, we're explorers, so very likely we're not going to mine this ourselves. We're actually going to mine from a small plant we have, a demonstration plant where we have a small-scale mining license. And we do this to go through the test and the recovery ratios, which helps a lot in the discussions with some of our potential partners. But we're not going to be big miners. It's very unlikely. We're explorers. That's where the skills are. And so the idea is whether it takes another year or 3 years to extract the most value, we'll offload it to a major or to the Chinese.
What type of resource size will satisfy you? What's the point you're trying to reach?
I want to be bigger than Kamoa. I mean, that's the ambition here.
Kamoa and Kakula. Yeah.
More seriously, one of the big anomalies, the geochem called Chiesa, it's 8 kilometers by 6 kilometers. If you were to capture a third of this, 20 meters, 2 times density ratio, and you get into the 0.5 to 1%, win the 5 to 10 million tons of contained copper. So this is the ambition. We're not there yet. But with the geochem anomalies, which are the best in countries, the drilling results in the oxide cap, which are the best in the country, we'd like to think we can compare to Kalumbila and Lumwana and potentially closer to the Kamoa type of geology.
Have you started poking some deeper holes, or are you still at the soluble oxides?
So look, we've done about 70 holes, 75 holes this drilling season, all about 150 meters. There's about, I want to say, up to 5 holes, which we've put down all the way to 250 meters. Out of those 5 holes, 2 of them did not hit mineralization, which for a quoted company is frustrating because you need to give good news to the market. But from a geo point of view, those are the most interesting holes we've had. So next year, what would be great is to find the balance between hitting the holes which allows you to give good news to the market, but also the holes which are irrelevant to the market, or the people like me who are not geologists, but which actually gives you an enormous amount of information. So We've gone all the way down to 250 meters. We're probably going to try to poke a few holes 400, 500 meters to try to understand which hosting rock, whether sulfides would be, whether it's in the lower Rhone, in the upper Rhone, or maybe in the basement. So we'll do this from May onwards.
So what technologies or what IS or IT, if at all, are you using to help you zoom in and avoid what you guys were talking about, where you can basically explore forever and incur huge costs? How do you focus?
So look, this year what we've done, we've been following the easy pickings, like my geologist would say, which is the geochem was so strong at surface that we've just been drilling where the anomalies were very strong. We had peaks of 3,000 ppms for copper in Chesa East. So that's the easy way of doing it. You could say the lazy way of doing it, but it's worked in 2 discoveries. What we're going to do over the next 3 months, we've hired a lot of consultants, people actually who come from Kamoa, who are experts in the copper belt, to try to do some ratioing in the geochem and advanced geochem analysis, so you can start to understand where the source of potential sulfide is. And that's going to be the work. So hopefully by May, when the ground is dry, we'd like to have a more educated guess as to where to drill, not just to hit easy picking oxide copper, but trying to see where at 100, 200, or 300 meters the sulfides are.
We've got a couple of minutes left. Did anybody else have a question? Heidi?
Sure. You said that you still need time and money to be able to take your program forward. Time, I'm assuming, is because of the rainy season, and now you have to stop and wait for a while?
Well, it's both. Time is money, basically. So it depends what you want to achieve, right? Every week now, we have the juniors, $5 million, $10 million market cap, signing a JV with the big majors, right? We see one in Finland, one in Canada. The problem is that right now, we could sign a term sheet where someone is committing to spend 10, 15 millions for the next 3 years in our license, but I'm going to give away 70% of the assets. So you have to kind of balance out how far you want to go alone, and that might be dilutive unless you're lucky with the asset sales, or whether you want to share the upside and the downside with a major partner now. And that's why I'm talking about the time versus the thing. If I can get to a billion-ton JORC resource within the next 2 drilling season, and I know I can extract a few $100 million of outcome for the shareholders, for the company, with the majors or the Chinese, I'll do it. But how much does it cost me to get to 1 billion ton? If it takes me another drilling season, and you assume we're going to drill 20,000 meters per season, which is a lot, right? It would take about 4 or 5 rigs. You know, am I going to dilute with an equity placing? Am I going to have enough with a non-core asset sale? Can I split the license and let one of the majors on one of the licenses to earn in, and I keep all the blue sky in the other one if they were to hit the mother load? All of this is up for debate. Right now, we can only concentrate on the science. We have amazing geos that do all this work, and we are having back and forth with the majors and the Chinese to see what's the fair deal for them and for us to try to retain upside. That's where we are.
George?
How close are you to power?
We are basically 40 kilometers away from power. I think that's where Kalumbila is. You know, if you go back 10 years ago, you had power all the way to Solwezi, and then nothing. And then Lumwana built power and tarmac road, then all the way to Kalumbila, which is another 50 kilometers west, and we're 40 kilometers west. So I think we have half of it is tarmac road, and in terms of power, we don't, but it's 40 kilometers away at Kalumbila. I mean, we have generators, but in terms of like infrastructure, it stops at Kalumbila, 40 kilometers away.
Just to understand, are you the furthest west copper exploration area? Or,
We are not covered by the Kalahari Sands. So all the majors and some of the juniors have spent 10 years trying to find stuff west of us, on the way to Winilunga and then on the way to Angola. But you're covered by the Kalahari Sands. Yes. So actually the first 50 to 100 meters will give you zero information. The geochem will be very hard. So you're all relying on the geophysics. There hasn't been a single success in the last 10 years. There's been hundreds of millions of dollars spent in that western side. So we've been very lucky, nothing to do with me, but we're basically right at the edge of the sands cover. So we're still outcropping, which is very good.
Remy, thank you very much. We've out of time.
Yeah.
Congratulations.
Thank you, Dominic.
Please stay around for when we announce the winner. Thank you. Could you join me in thanking Remy? Well, after an AIM-listed company and a TSX-listed company, we now move to the Australians. And our next speaker is Andrew Spinks, Managing Director of EcoGraph Limited.
Good afternoon. We've spent the last 6 years developing a vertically integrated business to produce battery graphite for the lithium-ion battery market. We've developed 2 business cases a mine in Tanzania, a project to produce natural flake graphite in Tanzania for the traditional market. And in parallel to that, we've developed EcoGraph, which is a purification technology to produce battery graphite, take natural flake graphite and produce battery graphite for the lithium-ion battery market. I guess the important aspects are they're standalone, they're not reliant on each other. The planned facility is going to be in Australia, and our sales and offtakes are very much focused on the emerging market in Europe and Northeast Asia, ex-China. Combined, they provide very compelling returns on investment. We're an ASX-listed company. We've got a market cap of just under 30 million. Our largest shareholder is Mitsubishi Financial Group. We've got a very experienced board with a mix of graphite expertise and mining and development in Africa to bring both these projects into production. Firstly, with our Tanzanian project, very positive news over the last week, which you've no doubt heard with the settlement of Barrick and the Tanzanian government. That was a landmark historic agreement which has been a welcomed settlement of the dispute resolution over the last 3 years. Those legislative changes has delayed, that were introduced in July 17, has delayed the development of our project. The settlement unlocks the financing. We're seeking $60 million US through the support of our partners in Germany, and the financing is being led by KfW IPEX, Germany's largest state-owned bank. An overview of the project itself. To produce natural flake graphite in Panko. We've completed all the necessary documents you'd expect to attract development bank financing. The most important aspect is we're the only graphite project that has met the completed Equator Principles standards signed off by a German bank. This project's ready to go, planning 60,000 tonnes, as I said, into the traditional market, which is about 8% of the market. The returns are shown. The capex is essentially 90 million, of which we're seeking 60 through KfW. Partners include ThyssenKrupp, a European trader, and Sajits. The demand for graphite is going to increase significantly. Many people have heard the lithium-ion battery, but not many people realise the anode is all graphite. And what's further important about that, half the battery is coming from natural graphite produced into spherical graphite. The demand is going to increase significantly. We see 27 kilos of natural spherical graphite required in every EV. The investment that's going on in Europe is enormous. There is a point of no return in our view. The Europeans and the cars are going to EVs, and we see the demand, the supply shifting into Europe from 2023. Quick overview of our EcoGraph business. We've completed an enormous amount of work, includes engineering studies, optimisation. The neat aspect of our business case is we've developed a purification process that we've got a patent that does not use hydrofluoric acid. The returns are very compelling, and the production is very much scaled and matched to demand. The unique purification process really is the back end. We've developed a multi-chemical purification. The front end of the plant is off-the-shelf equipment, and what we end up with is a product that ticks all the boxes. It's eco-friendly, and it's brings a diversified supply into outside of China. The plant itself is a scaled multi-stage development, and this will be the first plant outside of China to produce battery graphite. The supply chain partners are looking for an alternate supply. Our two projects fits the ESG governance that is coming out very strongly now. So we're very unique. We've got a very attractive supply chain. We're got a number of milestones now just to finalise to bring these projects into production. They're mature as you'd expect to secure the financing that we've attracted.
Andrew, thank you very much, and you beat the timer as well. Well done. Judges, have we got some questions? Heidi, would you like to start?
Hi. So You completed your BFS in 2017. Has the lag from then until now been because of the uncertainty in Tanzania or any other reasons?
Oh, look, absolutely. It was the uncertainty, the legislative changes that were introduced. We were about 8 weeks away from final credit approval, moving into development, and we've been working over the last 3 years, working with our banking partners, with the government. We're working within the legislative changes. We're obviously working with the government, and the remaining milestone that needed to be settled was the agreement with Barrick and the government.
George?
There's obviously a very big mine across the border in Mozambique, which is Syrah Resources, which has currently had to cut production because the market's oversupplied. And they've got, they could increase capacity even further. Are you confident there will be enough tightness in this market going forward?
Graphite is a really interesting mineral. It's an industrial mineral and should be treated like one. And I guess we've spent the last 6 years on product qualification, understanding the market, matching our product to making sure it meets specifications. And it's very important to bring projects online that is very much matched to that demand. And I guess our approach is to scale up, get into the market at a modest scale, and then scale up. And that's the strategy, to increase production once we're in.
So, what's the CapEx for both phases?
The CapEx for the mine is 90 million US, which we're pursuing 60 million through the debt financing that I've discussed, and the downstream is split in 2 stages. The first CapEx for 5,000 tonnes is 23 million, and the second stage to add 15,000 tonnes is an additional 49 million US. We've received strong interest from the Australian government to support the financing of this development in Australia, but ultimately, as demand increases, which we're going to see in Europe from 2023, we'll look at increasing production from a second facility that's more tied into the Tanzanian European demand as it develops.
When producing natural spherical graphite, the main risk and cost driver is at the purification stage, right? So if you go thermal, it's energy intense, but it's clean. If you go chemical, then until recently, it was rather a dirty process that required a lot of caution, and a lot of environmental issues are involved in the Western world, at least. And it looks like by eliminating the hydrofluoric acid, you've managed to find a really good solution. So I guess the question would be, how important is it still for you to actually be vertically integrated backwards into a mine in Tanzania? Because you can probably replicate your Perth plant closer to the other markets, and maybe there are other sources that are cheaper or closer and don't require inland transportation in Africa. How are these strategies still aligned? And are they maybe mutually exclusive? I don't know.
Yeah, look, the downstream strategy is now really based on sourcing that supply from outside of our existing operation. I guess the importance of the money that we've spent and the time we've spent on bringing Panko into production, the Equator Principles work that we've done to meet those standards is really incredibly important to the car manufacturers, and we're seeing the major European car manufacturers in their governance statements wanting to see responsibly produced resources. So we see it as a critical link to have that visibility through to the mine, that we've got strong governance on that front.
So that's the advantage of the vertical integration for you, basically enabling ground to purified spherical visibility.
Absolutely, and there's an opportunity to really, through the development of our Panko project, to further value add the graphite in country. There's other industrial properties that it's useful for, and Tanzania can play an incredible role in this EV revolution that we're moving towards.
Jonathan?
Yeah, you're raising a very good point, Eris. You were sitting on a panel yesterday where we learned that the energy transition, the battery metals transition, is a purely Chinese-dominated story, right? Being it financing, investments, offtake, even the clients of the ultimate product is China in itself. You have managed to set up your company in a very European-centric manner. We saw your partnerships with Thyssen, with KfW Bank. Where do you see the advantages or disadvantages and the opportunities of creating shareholder value from that strategic positioning?
It's expanding the operation, getting into developing the projects on that thematic, that strong thematic. We changed our name last year to represent the ethical nature of our development, but it's the value is really in securing the market share. You know, our strategy has been around securing market share, and once we've secured that market share, we can grow the business. The growth in battery graphite will require increased production in Panko, increased production on EcoGraph. So the value proposition is enormous. We can also go downstream. There's other opportunities we can pursue, but certainly the value going downstream, we double the margin from the mine to the first stage. The purified spherical graphite is just the precursor, the first precursor to anode manufacturing.
We've got time for one or two, maybe two questions. Did anybody have anything else? Andrew, they've satisfied them. You've satisfied them, so you can take a seat and we'll be able to announce whether you were victorious in just a few moments' time.
Thank you.
Thank you, Andrew Spinks. Our next speaker is Mark Strazek, Executive Director of Tietto Minerals.
Thanks very much, Tom, and let's get underway. Look, it's a very simple value proposition. We're rapidly growing shallow, high-grade ounces at Abujar. We've got 2.2 million ounces. We're seeing grades of in our resource, a JORC resource at 2.2. We're drilling our dollars further. We've got our own drilling team. We've got 4 rigs right now. We're going to have 5. We've got lots of upside on basing on what we've currently got. So we're targeting by the end of this year to have 3 million ounces. So there are the disclaimers. I hope that you have a look at us because we are all in this to create value. We're shareholders and we want to go all the way. So last year, the MD was here. We were at 700,000 ounces. We said we're going to go multi-million. We've delivered on that to 2.2 million ounces of JORC. If I could bring your attention there, those intervals, those gram meters, 200, 6 of them, 100 gram meters, that's width and grade. And that's very close to surface. That's very important when you're looking at financing early payback. 50,000 meters of drilling. So we're drilling a lot for a junior, and we're able to do that because we're financed and also because we can control our costs. Look, there's where we were last year at 7 or 8 cents. We got up to 40, but we raised it to 26. So we raised $17 million Australian in 2 tranches. So the number's a little bit better than that. We're probably after cost just sitting somewhere just under 17 right now. We've got a team founded by Kagan and Francis. So we cover all the aspects from mining engineering, finance, geology, and a great exploration team as well with a number of the geologists that have been with us right from the start. So it's been a growth story and we've been able to attract investors. The directors, we hold 7%, and as I said, we want to build this gold mine because we believe it's worth a lot of money. Côte d'Ivoire, it is actually a fantastic place to work. We're just out here in the middle, so it's a new gold province, but importantly, it's got strong government support. It's got the right kind of places we've demonstrated to make the big discoveries, and it's also got fantastic fiscal regime as well. And we've seen people like Perseus as well that have gone over to be a multi-billion-dollar company driven out of Sissingi, and also they're developing Yare. This is the number. 2.2 is a high-grade core, and I'm just going to work you through it. We've got 2 deposits. We've got indicated resources. We've got 70K of strike, so there's plenty of upside. We've got very, very good metallurgy off the preliminary work. There's more work to be done, a big drill program, and drilling extremely cheaply. I don't know anyone that can drill as cheap as us. Just showing you the plan there, the high-grade cores. What you can see here is the indicated, so we've been able to de-risk as well as grow our resource and actually increase the grade, which is quite rare. Some of the hit lists there, all less than 100 metres. So it's a table there you can go and have a look at. This slide is very important, and you can see what gets projects financed is about early payback. This zone here is around about 600 metres long, and some of the grades in there are up to 3.5 grams. So you put it together there and you can see that this project could deliver very, very quick returns. Just again, zooming in on that area, you can see some grades there, 3.5 grams almost, but very, very high grade and continuous plunge with the potential for further up dip and down dip. Cross section, some very good widths, multiple loads, very high grades from surface, and also the potential to develop underground. So that's the growth as well. Just reiterating there, very high gravity component up to 80% and CIL, so it's going to be a very cheap, simple plant. We're already creating a mine, as I said, 2 deposits, mine camp scale, so a bit of upside on this, lower grade but oxide, so it could go through a plant like a dose of salts. This is what we said we were going to do, and we delivered 2.2 million ounces. We want to aim for 3. We're funded to do this drilling, and by the end of this year, Q3, we want to try and deliver 3 million ounces in terms of the resource. Still plenty of upside. You can see here we've got the 2 drilling targets. This is for resource definition, and then we've also got our pipeline of other targets to continue to grow this resource. Just going to run through some of the work there. This year, drilling, we're funded. We're also going to move into the feasibility stage of work. The project, we're very lucky, there's a power line just across it. At this stage, there's great analogies to draw from, so we don't anticipate any issues in delivering a PFS at the end of the year while continuing to explore. So that's it. It's high-grade gold, it's shallow. We've been able to delineate resources rapidly, lots of news flow, and I guess we're almost going to cut off, but we're funded, and please join the story.
Thank you, Mark. Thank you. Judges, who would like to start first?
Let me do a start.
Jonathan will start first. Thanks, Jonathan.
Very impressive. I think the results speak for themselves. Looks like you have a shallow deposit, fantastic grades, a good size deposit, a process that seems to be pretty straightforward. What's your route to production?
Right. We want to delineate 3 million ounces, and we can see line of sight. I mean, our market cap just under 100 mil. We're able to draw from analogies with West African Resources and Sissingi. So you can see if you worked on 2 million, maybe about 120 million US to put in an open pit and a plant. So we think following the resource, then Q4 delivering a PFS, and starting to talk to some of the this we believe would work for just conventional debt finance. It's in a great jurisdiction where banks are very comfortable lending, and so the next steps is doing what we said we're going to do, and then talking to the lenders, also putting in some of the long lead environmental studies as well, meeting the equatorial principles.
What is the earliest you can be in production? Have you thought about this?
Yeah, look, I think as we want to try and be right-sized on the plant, but environmental is around about a 2-year, and that's the work that we're starting now. So, look, you've got to allow a little bit extra, so you'd say 3 years, which I think is still a pretty good timeline.
Yeah, something that's interesting for me on all, I guess, massive exploration projects, and you have Sama Resources, the guys that are looking for or maybe found nickel in the Côte d'Ivoire, and they're using some advanced technologies, and I was just wondering, it's something that I guess is intriguing for me across the board. We're in 2020. We have AI, we have mass data analysis, we have computing power that in our phone is more than was powering the mission, the Apollo mission to the moon. How are you guys putting this to work to reduce the cost of exploration, increase the, I guess, both the false positives and the false negatives,
Yep.
and make things more efficient in the early stages?
Right. So, look, the first two deposits were actually drilling under artisanal targets, so we're able to shortcut some of that process. We've recently flown Aeromag, also have IP over an extensive area, so we've got those. Because we know the resource is there, we're able to use that as an analogy to go and look after it. So, as we said, we've been able to identify some other targets that are supported by the more traditional means. And the other thing, which is a real game changer, is being able to drill for around about US 35 a metre with our diamond. So it allows us to take some risks. We can go there and we can put a line of holes in there and just see if it works. Whereas normally as a junior, I'm not going to say we're going to be flippant with our money, but we want to fast track this growth, and we'd love to be at 3 and we'd love to be at 5 because we think this has potential to be a really large, brand new, multi-million ounce region.
What sort of production are you looking to develop?
Yeah, so look, our target would be a 2 million ounce reserve, and obviously we need to get to that stage to do it over 10 years, and we think that's something that's incredibly valuable. So 200,000 ounces per year is what we'd like to do, but I do need to say that we do need to complete the feasibility study to get that done.
And what sort of population is there on site?
Right, so on the mine site there's no villages, so there's no need for any, over the project area, there's no need for any moving any villages or dislocation, and so there's no problems there at all as we looked at a large area that would cover any future development.
Are there any population centres nearby?
Yeah, so we're about 30 kilometres away from the third largest city in Côte d'Ivoire called Deloa, so very, very good infrastructure. So it's a fantastic place to work, and it is a new region that we've been able to uncover and grow.
Well, it looks like our judges are almost complete in their questions. I'll just like join me in thanking Mark for his presentation. Thank you, Mark.
Okay, thanks very much, and thanks for your time.
Well, we've heard 2 West African gold stories, a copper story in Central Africa and a graphite story in East Africa. I'm sure you've already picked your favourites in your head, but fortunately for you, you don't have to announce them publicly. The ones who do have to announce them publicly, though, are our judges. We're going to take 5 or 10 minutes to deliberate, and if you want to stay with us, and then we'll come back shortly with the results. Thank you very much.